With oil above 100, you might be wondering, are energy stocks worth a deeper look? Well, let's find out by putting Exxon Mobile through the Pulse framework. I'm going to switch to my Excel here. Give me a sec. And let's get going. All right, so you can see I have the Pulse template loaded over here. And I'm going to put Exxon Mobile in. XOM is the ticker. And give it a second to load. So we're going to get the data. All right, so the data is loaded. So let's start with the P in the Pulse framework, which is economic profits. And you can see the picture here is not amazing. The bars here showing that the profits are inconsistent. You had some years where the profits were high, then the economic profits were actually negative for a number of years, and now they're hovering around zero. Not a great picture, especially given that the amount of capital is rising. So I would say this is a kind of a yellow flag for the company. Switching to the U, underlying free cash flow, you have a pretty decent chart in the sense that there's positive free cash flow most years, and you're also seeing that the free cash flow conversion rate is close to 100, a little bit above 90%. But the challenge here is that the free cash flow is really not growing all that much, which is interesting given again that the amount of capital deployed in the business is rising. So that's not an amazing combination, although the free cash flow by itself does look good. Now let's switch to the leverage here. It's the L, and that looks pretty good. You got almost no net debt, so not much reason to spend more time here. And let's go to the S. That's the smooth free cash flow. Here, 4.6% for this business, I would say not exactly interesting for me. And the reason here is that it's not that it's a particularly low free cash flow yield, meaning it's not particularly high expectations in the stock, but you still have kind of, not, pretty high expectations, especially for a business hasn't been really growing free cash flow or economic profits over time. So this is not a low expectations number here. And then finally, if we go to the E, which is the EV cap rate, 3.6%, that's pretty high expectations, meaning pretty low free cash flow yield. EV cap rate. And, the expectations are not low for the stock. So if I were to put it all together, you basically have, not amazing economic profits, decent but not great free cash flow, excellent balance sheet, but then somewhat uninteresting valuation. So for me, ExxonMobil would not be that interesting at this point in time. And I would say it would be more of a pass. I think, if you want to use this template, you can do this yourself for any stock. Just check out the link in the description, and I will see you in the next video.